So what time frame do you usually use? What's your most popular, I guess, or when you're using the Elliott wave?
We look at all time frames, and actually what we're looking for is a time frame where we recognize the pattern. The pattern's the clearest, because sometimes it might not be clear on a 30-minute chart or a 5-minute chart, but if you take a step back and look at a daily or weekly chart, you see this very clear pattern, and it implies something about the future.
Maybe explain a little bit what the Elliott wave principle is and how does it help predict major market trends?
So what the Elliott wave principle is, it was founded by R.N. Elliott back in the 1930s. He was looking at the market, and he noticed some patterns developing, not only say in the Dow Industrials, but in other markets.
Honestly, from the retail perspective, we are only buying right now. Nobody is buying. All our customers are selling to us at this point. It's been like that for a few months.
I don't think the rally's over. I mean, I think we were at 4,400. I think we can get even higher. I just don't think we're going to new all-time highs just yet in terms of the Elliott wave model that we look at.
All right, welcome to the Gold Awakening podcast. Today we have a special guest, Steven Hochberg, from Chief Market Analyst at the Elliott Wave International. He's the editor of the Financial Forecast and the Elliott Wave Financial Forecast. He's also an expert in technical analysis, socioeconomics, market cycles, and precious metals forecasting. Steven, welcome.
Well, thanks for having me. Appreciate it.
Of course. Steven, before we get started, if you don't mind just telling the audience a little bit about yourself and how you got to where you're at today.
Sure. I started right out of college with Merrill Lynch back in 1984, dating myself. And I was on the retail side, and I was probably the worst retail broker in America at that point. But one thing I was doing was reading a lot of things that were going on in terms of the market. And one of the newsletters I came across was from a guy named Robert Prechter of the Elliott Wave Theorist. And everything I read about and what he was talking about made a lot of sense to me. And so I kept following him and started applying the Elliott Wave principle on my own. Wound up going to graduate school in the early 90s. And when I got out of graduate school, Bob and I talked, and he said, "Hey, listen, come down to Georgia, and I want you to work for me." So I hopped in my car and drove down to Georgia, and that's how I'm with you today and with Elliott Wave International.
Very cool, very cool. So for our listeners new to technical analysis, maybe explain a little bit what the Elliott wave principle is and how does it help predict major market turns?
Yeah, so what the Elliott wave principle is, it was founded by R.N. Elliott back in the 1930s. And he was looking at the market, and he noticed some patterns developing, not only say in the Dow Industrials, but in other markets. And he said, you know what? I'm not looking at a market that's just reacting to the news, because I'm seeing the same patterns play out in gold or in stocks or in bonds. He said, what I'm looking at is kind of the natural development of human psychology. When people get together in crowds, mass psychology, there tends to be a pattern. And he chronicled that pattern. It's 5 steps forward, 3 steps back, a 5-3 ratio. Which is a fractal, meaning it occurs at all degrees of trend all the time. So if we're looking at a yearly chart or a quarterly chart, an hourly chart, you're going to see the same patterns develop and see them across markets. And so, we can't see the future, but if we can determine where we are within the development of the pattern, it implies something about the future and gives us an odds of what might happen as we go forward.
So what time frame do you usually use? What's your most popular, I guess, for when you're using the Elliott wave theory?
Yeah, we look at all time frames. And actually what we're looking for is a time frame where we recognize the pattern. The pattern's the clearest, because sometimes it might not be clear on a 30-minute chart or a 5-minute chart, but if you take a step back and look at a daily or weekly chart, you see this very clear pattern, and it implies something about the future. And so we're looking at all degrees of trend and trying to just see what we recognize and when.
Okay. Is there anything that you see currently when it comes to precious metals using the Elliott wave patterns?
Yes, most definitely. So I think we're in so we talk about a 5-step forward, 3-step back process. movements in the direction of the one larger trend develop in 5 waves. Wave 1 up, wave 2 pullback, then you have a big long rally in wave 3, and then a surprising pullback in wave 4, and then you have the final upward thrust in a 5th wave that completes this 5-wave pattern. So I think the January 29th high in gold, when we got to what, $5,600 an ounce, I think that was a top of wave 3, and we're in a wave 4 pullback, a correction to the rally that started a couple years ago. And so that's how we're looking at the patterns right now. We're just following along as to where we are within this 4th wave correction.
So wave 5 could start at any point, I'm assuming. It might have already started. What are your thoughts? And what kind of length might we be looking at for wave 5 based off of the first 4 waves?
Yeah, so I don't think wave started just yet. I think we're in the 4th wave. I think the correction has more to go. And it's mainly 2 things. One, I don't think the pattern is complete that we're looking at. And also, I don't think the sentiment is quite right for the start of the 5th wave. And by that, I look at charts. For example, I have a chart that we can show of the Commitment of Traders report. And each week it comes out and it chronicles commercial hedgers, large speculators, and small traders. And it's very interesting, and it's very informative, because you can see how these groups of traders behave. Usually the large specs are mainly comprised of hedge funds, and they're trend followers. They get more bullish as the trend goes up, and they get more bearish as the trend goes down. Commercial hedgers, on the other hand, are in the business of producing and mining gold, and so they're rarely net long. They're usually hedging to some degree, and when they turn bullish, they cut back their hedges because they think we're going to get a rally. Well, at the high that we had in January of this year, the large specs, I think, were net long about 42% of total open interest. And since then, the market has declined, as we know, in this 4th wave, but they've actually increased their amount of bullishness, and they're now net long 52.4% of total open interest. So their normal behavior is to actually cut back when the trend goes down. Instead, they've been buying this whole decline. And to that sentiment measure, to us, suggests we've got to go a little bit more, either in time sideways or down in price, for the large speculators to kind of throw in the towel and say, we were wrong, gold's not going up, gold's going down. And I think once we hit that juncture there, that'd be a good time to really start getting aggressive in anticipation of this 5th wave to new highs.
Gotcha.
And this could be a pretty powerful wave to the upside once it starts.
Yeah, so what we're seeing here, so I'm a precious metals dealer in Windsor, Ontario. We are, honestly, from the retail perspective, we are only buying right now. Nobody is buying. All our customers are selling to us at this point. It's been like that for a few months, which is the most, I would say this is the least positive our retail market has been in terms of investing again in precious metals. I think a lot of people.
No, that's a good point. And we've had a rally now. Gold's taken off for several weeks, and this is something we've been looking for. We've been looking for this intra-correction rally. We're underway. I don't think the rally's over. I mean, I think we were at 4,400. I think we can get even higher. Right. I just don't think we're going to new all-time highs just yet in terms of the Elliott wave model that we look at.
So let's just say we start wave 5 later this year. Like, is that possible as far as the time frame goes? Late fall, early winter. Let's just make that assumption. Like, how far long does the wave 5 go? Like, can it go 6 months, a year, 2 years, 3 years? Because a lot of people out there think we got a long ways to go when it comes to this bull market in precious metals. Now, can we start a whole new wave cycle with it when it comes to precious metals that brings us to the next level to all-time highs? Or I'm not really sure how the Elliott wave works. So if you wouldn't mind kind of sharing your thoughts on that.
Yeah, so we're looking at patterns, not time so much. Time will come into it as we get going and we see the development of the patterns. But what we're looking for is, from whatever low we make in wave 4, we're looking for 5 waves to the upside. I talked about the Elliott wave being a fractal, self-similar patterns at all degrees of scale. So once we determine wave 5 is underway, we're looking for 5 waves to the upside. It's going to carry us to new highs. Now, In precious metals and commodities, the fifth wave tends to be the strongest wave, whereas the stocks, the third wave tends to be the strongest wave. And the reason is because in commodities and precious metals, usually what's driving that fifth wave is fear instead of hope. Fear of inflation, fear of war, fear of whatever, fear of shortages. And so fear is a much stronger emotion. And so that's why the fifth wave in commodities and precious metals tends to extend. So we really could have a huge move to the upside. I know we were kind of going into this parabolic move into the third wave. I wouldn't be surprised to see another type of parabolic move once the fifth wave gets going. And it could last, it's tough to say. It's when we see 5 waves up complete, but it easily could last for a year, 2 years, or whatever. But we'll make that determination once it gets underway.
So do you know how that Elliott wave worked in the late 70s, for example? Like, did we have multiple Elliott waves in that 1970 decade? Like, did you
Yes.
have, okay, so can you kind of walk me through the last one in the late 70s, like 1979 area?
Yeah, so we gold rallied up to a high of 850 in January of 1980.
Yep.
And then we had this long kind of choppy move down that bottomed when it was in 85, I believe. I mean, it was,
Yep.
or the first leg of it was 85, and then but it was just a long, drawn out affair. That to us was a second wave, and then we went up to a third wave of a certain degree that peaked in 2011, September 2011, and 1921, and then gold got crushed down into December of 2015. That was a fourth wave at a different degree, and then we're now in this fifth wave. We call it, call it a primary degree. And within the fifth wave, we made the third wave high in January. We've got the fourth wave pullback, and we still have this fifth wave to go.
So this could be a very similar play out to 1979 then, where silver went 6x and gold more than double.
It absolutely could be. We can't really make that forecast with a lot of confidence right at this point, but if we do get that extended fifth wave like we usually do in commodities and precious metals, I think your scenario is very plausible.
Okay. We're hoping so. Let's put it that way. So what are your thoughts on the Fed and what does that factor into your technical analysis at all? What do you think they're going to be doing with interest rates for the rest of this year and even leading into next year?
Yeah, so we're looking at human psychology, mass psychology, and the psychology is endogenously regulated. It regulates itself. So what the Fed does really doesn't affect the waves. In fact, the Fed follows the waves. And what we could do is just look at the 3-month and 6-month US T-bill to determine whether the Fed's going to raise rates or lower rates. When the Fed funds rate gets out of whack with the average of the 3-month and 6-month T-bill yields, eventually they're going to be forced to move that Fed funds rate in conjunction with that. So right now that T-bill rate is right kind of where the Fed funds rate is. So we're just watching it, and once it gets out of whack, that's what the Fed will do. They'll get in line. So it really doesn't affect the Elliott waves as they unfold, but it's all part of the wave process.
Very interesting. Okay. So how does investor sentiment impact long-term market cycles, and where do you see the crowd psychology right now?
Yeah, in terms of the stock market, is just we're at record levels of bullishness. One of the indicators we look at is Market Bain's bullish consensus, which looks at advisors and investors, and it takes a poll every day, every afternoon as the market closes. And right now we're at almost on a 2-week basis, we're at 79. It doesn't seem very high, but the high peak for this measure has been 81 over the last 3 decades. So
Wow.
we're really up the upper end of it. And on a 2-week average, we're at record levels. So we're seeing a lot of bullishness. At the same time, if you look at something like the VIX, which is the fear and the greed index, so to speak, we just made, I think Monday or last week, we just made a new low for the year. So there's a very high degree of complacency. People don't believe the market could go down. And we're entering a historically a weak seasonal period. So I think that we're looking for and forecasting a decline in the market. and we'll see if that plays out as we move through the
I'm
fall.
assuming you think we're in wave 5 right now of the stock market. Is that
Yes, I think. In fact, I think there's a good chance we completed wave 5.
interesting?
If that's the case, then the decline that's coming is going to be very long term.
How
So
far off are we from all-time highs right now in the stock?
not too far. Just the all-time high was what in the Dow is 53, 54,000, and we're not far from that.
Okay.
Now, the question in terms of gold, we have to be a little bit careful because if we look back through the period of 2001 through 2011, gold was in a huge bull market at that point, rallying from 253 to 1921. But during the Great Credit Crisis in 2008,
Right.
during that most virulent part of the decline, gold had a big decline too. Gold was down with stocks, down 38%. Now, it was in a bull market, so it got its feet under it and it started rallying from October 2008 all the way up into 2011. But you have to be careful because if the market gets hit here, gold could be under some selling pressure also.
I do expect that. So you guys expect sometime this fall for the stock market to start really rolling over and metals to fall with it, and then in the new year, kind of metals to kind of rebound like they usually do, and then stocks to continue to be under pressure into 2027. Is that correct?
Yeah, we could have a rally late in the year in stocks because usually you get your year-end rally, but it should be a counter-trend rally to whatever high we're making, and we think there's a chance we're making the high right now. But that's a plausible scenario. We'll have to see, where gold is as we go. As stocks go down, does gold go more sideways and frustrate people because it's not rallying, or does it go down too in terms of price? I just think we need to see just a little bit more bearishness by gold traders in order to establish that fourth wave low. And that bearishness will come either by a sideways move where people just go, it's never going up, and they give up, or it will be by a decline. I've got some support in the 3,200, 3,400 area on gold. That's pretty solid support. If we do get down there, we'll be looking at our indicators and say, okay, what do they look like, and does this support the view that the fourth wave is at its end?
Right. Now, as far as stocks go, do you think this will be a long-term bear market that we'll be entering? And kind of tell me your thoughts on where you see stocks heading.
Yeah, I do. I think we're at the end of the fifth wave. We can count it at multiple degrees of trend. Just starting, for example, at the 2009 low, March 2009, the end of the Great Credit Crisis. That was a fourth wave low. We've had 5 waves to the upside. The fifth wave is just ending right now as we're speaking, and so we're looking for something on the downside here coming in the market, and hopefully we'll see that come to fruition. Now, what we say to investors is just be safe right now. Just there's no reason to take a lot of risk, particularly as we're entering the September, October, November period within a historically seasonally weak period within the market.
So I kind of look at this as the biggest transition of wealth in history and the biggest opportunity moving out of equities and bonds and into precious metals and commodities in general. Do you kind of see something similar playing out where a lot of the people's money will be rushing into precious metals and commodities over the next few years?
Yeah, in fact, we've been expecting a big move up in commodities. Now, there's a couple of different interpretations of what this move is in terms of commodities, but certainly in precious metals. I mean, we've been in a bull market for a number of years now. And in fact, if you look at gold over the last 10, 15, 20 years, it's outperformed the stock market. I mean, it's just really been a stellar investment. And I don't think that move is over yet. One of the interesting things is, and I'm sure your viewers do this too, is that we look at the Dow in terms of gold.
Sure.
And amazingly, that peaked in August of 1999 when it was like 44 ounces of gold could buy the Dow. And so we had that, a big down move in that, and it wiped out about 85% into August of 2011. And then in terms of Dow Gold, we had a rally into September of 2018. So this bear market in terms of gold, we had a ABC where that B wave was in 2011. I think we're in the C wave now. So the Dow in nominal terms is making new all-time highs, or was recently at new all-time highs. But the Dow in terms of gold is at new lows in this kind of
Right.
7-year bear market from 2018. So it's just the purchasing power of the dollar just has been decimated down, what, 99.5% since the Fed was created. And so gold is real money. And, it's not that the value of gold or the purchasing power of gold is fluctuating. That doesn't fluctuate. It's the accounting unit of the government, which is the dollar, that's losing its value. So
Right.
that's how we measure things, is like looking in terms of real money, which is gold.
Now, are you guys also believers in the Dow gold theory where it does come back to a 1-to-1 eventually, like it has historically in the past? Do you see the Dow and gold going to 1-to-1 where the Dow could come down to 20,000 and gold can go up to 20,000? Do you see that as a possibility?
Oh yes, I think that's definitely a possibility. It's tough to forecast those things, but if, like you just said, if the Dow gets cut, you know, 10, 20, 30,000 points, which is possible, and we're at 54,000. One of the targets that we have for gold's upside, I mean, there's certain Fibonacci multiples we've been looking at. One is 8,155. Another multiple is a little over 13,000, and then another multiple is about 21,000, which is a long-term trend line of a channel that gold's formed that we have in our mind. So if those two things happen, then you're going to see a 1-to-1 relationship between Dow and gold.
So if you have a 21,000 gold, where do you have silver? I mean, 20-to-1 ratio, maybe over $1,000.
Yeah, yeah. Silver's going. I mean, it's the higher beta metal, so that's gonna soar too. I think our target is much more. I want to say certain. We're more confident on where the trend channels are within gold as we move higher, and so we're kind of monitoring that upper end of it. But like you said, silver can just soar, and I think both those metals are going to be good places to have a portion of your money, maybe a good portion of your money as we go forward.
Now, do you anticipate the metals rally to go for several years, or where do you see us kind of topping out? Because that's kind of the question I get a lot. Like, do we got another year to go? 3 years, 5 years? Some people say 10 years. Like, where?
Yeah, it's possible. Like I said, we're looking more at form and pattern than we are at time,
Sure.
and so it just depends on how that fifth wave unfolds. It could last several years. A lot of it's going to have to do with how long is the bear market in stocks. Bear markets and stocks usually are quicker than bull markets because people are just thrown in the towel. They're afraid. Markets crash. You have these big upward moves and continue down as the bear market unfolds. So it's probably going to move. Gold's probably going to move up as stocks move down. Now, there's going to be a period, like I said, where it could be like 2008, where we get that washout in gold. But I think if you're in a long-term bull market, as we are, you're going to find your footing. This fourth wave we're looking for, and we'll get that move to the upside. So, like I said, we've got targets based on Fibonacci multiples that Bob Prechter has talked about in his newsletter, around 8,155 as we move to the upside, a little over 13,000, and then 21,350, I think, is the multiple that we were looking at, which brings us up to a long-term trend line that's been in force for since the 60s in gold.
Okay, awesome. Yeah, speaking of your newsletter, I know you guys are doing a special offer. We'll be putting it in a link below. Usually you charge $97 a month, but you're doing a 1-month trial for $11. Is that correct?
That is correct. For the people that watch this, what you do is go to ElliottWave.com. There's 2 L's and 2 T's in Elliot. It's one word. ElliottWave.com/GAP. GAP for Gold Awakening, GAP. And for $11 for 1 month, you'll get Bob Prechter's Elliott Wave Theorist. You'll get the Elliott Wave Financial Forecast, which I write with my colleague Peter Kendall. And I also publish a 3-time-a-week short-term update after the market closes on Monday, Wednesday, and Friday, just updating the Elliott Wave patterns and what we're seeing on a short-term basis. So people are interested in just trying out and seeing how we view the market, how we view gold and silver and precious metals. We've written a lot about it recently, and we'll continue to do so. They can go to that URL and check it out.
Fantastic. I appreciate your time, Stephen. It was very insightful, and yeah, I think I'm going to subscribe to your channel as well and get more insight into this because it's very fascinating for sure.
Well, thank you. Thanks for having me. I appreciate it.
Of course. Thank you.